Financing a car in the UK can be done through several methods, each offering different benefits and considerations. In this video, I will discuss ways to finance a car and provide steps you can take if you're looking to finance a car here in the UK. Now, the first way to finance a car here in the UK is through personal loans. Now, personal loan is actually a popular option to finance a car here in the UK. This was the route we took. So after doing lots of research on other ways to finance a car here in the UK, we realized that personal loan will work best for us. So what we did was we went to Money Supermarket, we put in our details, we got a loan pre-approval, and then when we applied for the loan, we got the loan. And the interest rate we got on the loan was about 8%, and it was just a better interest rate than what other method of financing a car here would give us. And we actually took the loan out for 2 years, so we intend to pay the loan even faster than 2 years. So how personal loan works is that you would borrow a fixed amount of money, that's the cost of the car or the cost of the car plus the additional cost that comes with car ownership, and then you will borrow this money from the bank or lending society or family or friends and pay it over a set period of time. If you're borrowing money from a financial institution, you will typically pay off the money with interest in about 1 to 5 years. Now, if you are borrowing money from your family or maybe a friend, you have like an agreement on how long you want to pay that. So that's just based on discretion. But if it's a financial institution, you would typically have 1 to 5 years to pay off the money, but you would have to pay it with interest. Now, the good thing about borrowing money from family and friends is that you may not have to pay interest on the money you borrow from them. Now, the benefits of personal loan is that ownership of the car is immediate. So there is no mileage restriction or fixed repayment terms like PCP. Now, one thing to consider when it comes to taking out a personal loan, especially with financial institutions, is that you need a good credit score to get favorable interest rates or to even secure the loan at all. Now, if you want to learn how to build your credit score here in the UK, you can watch my video on that. I'll link it to this video for those who are interested in watching it. Another thing you might want to note on that personal loan is that if you apply to borrow the money from a financial institution, you will not get the money immediately you apply for the loan. You will get the money a few days after you applied for the loan. So let's say you apply for the loan today, you will get the money in like maybe 5 or 7 working days time. So this is something you have to put in mind. So don't think, okay, I just see a car today, I collect the loan today and I can pay up today. No, you have to wait for 5 to 7 working days for the money to enter your bank account, basically. Now, the second way to finance a car here in the UK is through hire purchase. Hire purchase is a straightforward method where you pay for the car in installments. So how hire purchase works is that you would pay a deposit, usually around 10%, and then you make monthly payments over 1 to 5 years. So almost similar to personal loans in how long you can pay the money for. It's just that for personal loan, you don't need any down payment because you're borrowing all the money from the bank and using it to buy your car. But this one, you need a deposit. Now, when it comes to hire purchase, ownership is actually transferred to you after you have made the final payment of the car. Now, the car is yours, but you don't fully own the car until you have finished paying the money on the car. Now, the benefit for hire purchase is that you have fixed interest rates, structured payments, and eventually car ownership, which is similar with personal loan, because when you take a loan, you would actually have a fixed interest rate that you would have to pay for a particular period of time, and the payment is usually structured, so maybe you are paying it every month and the car is actually yours at the end of the day. But another thing you want to note about personal loans is that there are some loans that come with variable interest rates where the interest rate would be dictated by the market or the Bank of England's interest rates, basically. Now, I would suggest you just go with fixed interest rate if you're going with personal loans. Now, one thing to consider with hire purchase is that the overall cost of buying the car can be higher due to the interest rate you're paying on the car, and the car can be repossessed if you miss your payments. Now, the third way to finance a car here in the UK is through something called personal contract purchase, which is PCP. Now, PCP is similar to hire purchase, but it has more flexibility at the end of the term. So how PCP works is that you would pay a deposit and then lower monthly payments over a set period of time. At the end of your contract, you can either pay a final balloon payment to own the car, return the car, or trade in for a new one. So PCP is actually good for those who are car lovers or those who like to change their cars after a set period of time. So instead of paying a balloon payment, you can just trade in the car or return the car, and that will be the end of your contract. You can decide not to own the car, and that will be the end of your contract, or you can trade it in and get a new one, or you can pay a balloon payment. So what balloon payment means is that at the end of your contract, they would value the car, and then the value of the car would be minus from all the payments you've made plus your deposit, and then anything outstanding is what you would have to pay. Now, this might not be a good thing for some people, because that means you have to pay a lump sum money at the end of your contract, which some people do not have. So that's why PCP is always a 50-50 thing, but I feel PCP is good for car lovers. Now, the benefits of PCP are lower monthly payments and flexible end of term option. Like I said, you can return the car, trade it in, or you can own the car. So I feel PCP is very flexible for car lovers, and the monthly payments would usually be lower than personal loan or hire purchase. Now, one thing to consider when it comes to PCP is that you have mileage and condition restriction, higher overall cost if you decide to purchase the car at the end of your car contract. So for PCP, the dealership where you're buying the car from would actually set a mileage restriction for you. If you go over that mileage, then both of you have to have a conversation, because that means you've broken your agreement and maybe you have to pay a penalty fee or something. I don't know how that works, but you would actually have a mileage restriction. So if you're that kind of person that loves traveling with your car, you might actually want to think this through if you would go for PCP. So the fourth way to finance a car here in the UK is through something called personal contract hire, that is PCH, also known as leasing. Now, PCH is literally renting a car for a long period of time. So how this works is that you pay an initial rental fee, and then you would make monthly payments to use the car over a set period. At the end of the term, you would have to return the car because you don't own the car. You are leasing the car. Now, the benefit of this is that you have lower monthly payments. Your car value will not depreciate, so you don't have any concern with depreciation, and you have the option to upgrade frequently. So this is also for car lovers. You can change your car anytime you like. All you need to do will just be to just adjust your monthly payments. So today you can drive Range Rover, tomorrow you can drive Jaguar. So things to consider when it comes to PCH is that you do not have an option to own the car. You also have mileage and condition restriction, and you have potential charges for excess mileage or damages. Now, the fifth way is dealer finance. Now, dealership here in the UK would often offer their own financing options. So how this works is that you would agree on a finance term directly with your car dealer, and this is usually in form of either HP, PCP, or PCH agreements. Now, the benefit of dealer finance is the convenience, and often there's always promotional rates and there's ability to negotiate on the terms of your car agreement. And there's a probability that you can get zero finance if you're buying a new car, not a used car, new car. They offer zero finance. So that's a good thing about dealer finance. Now, something to consider when it comes to dealer finance is that they may not always offer the best rates compared to banks and other lenders when it comes to used cars. And you should also be cautious of upselling, because they might say, okay, if you buy a car with us, you buy it for this price. If you now negotiate, they'll say, okay, we cannot give you this price, but we can add extended warranty if you pay. Do you get? So they'll be adding things for you. So they used to upsell when it comes to dealer finance. So that's something you should just be cautious of. Now, the sixth way to finance a car here in the UK is through credit cards. Now, a credit card can be an option for those with sufficient credit limit and a reasonable interest rate. So how this works is that you will pay for the car using your credit card and then repay the balance as you would with any other purchase you make with your credit card. So the benefit of using a credit card to finance a car is that there's a potential for zero interest rate, especially when your cards still have introductory offers. So here in the UK, most banks would actually offer you 0% finance for the first few months of having a credit card. So when you take out a credit card, they might offer you 24 months interest free, so you can use the card however you like, pay it up, do not pay it up for the first 24 months of having the card, and you will not pay any interest. So that what they used to call introductory offers here in the UK. And there's the possibility that you can get reward points and cashbacks if you finance your car with a credit card. Now let's talk about the things you have to consider if you're using a credit card to finance your car. There's a possibility for you to pay high interest rates if you do not pay off your card within the introductory period. And there's also a potential of it impacting your credit score if your repayments are not managed well. So that's one thing with credit cards. And not everyone has a high credit limit. So you might not be able to use your credit card to buy certain cars. Maybe if the car you want to buy is like £1,000, £2,000, I say yes, you can use your credit card because you can get some credit card that can give you £1,000, £2,000. Now, the last but not the least way to finance your car, which is usually the most preferred or the most suggested or the most advised, is using your savings. Now, paying for your car outright with your savings is like the simplest method because you just carry the money in your account and go and pay. No need for application, no need for credit check, no need for all of that. So basically how this works is that you will use your personal savings to buy the car without the need of any form of finance. Now, the benefit of using your savings to buy a car is that you will not pay any interest rate or you will not have financial charges, and you have immediate ownership of your car and you are not in any debt. But something to consider is that cars are typically expensive, so you would have huge upfront costs, which can actually dent your savings and you may not be able to use your savings for other purposes. Now, let's talk about steps to take before financing a car. The first thing is to assess your budget. Now, before starting the car finance process, it is crucial to assess your budget. Determine how much you can comfortably afford for a deposit and monthly payments. This will help you narrow down your choices and prevent you from overstretching financially. Now, I do have a video on the channel where I talk about cost of buying a car in the UK. You can go watch that video so that you can have a rough overview of the cost of car ownership in the UK. So it will just help you budget properly so you'll be able to assess your financial situation and help you set a realistic budget. I'll leave the video to this video for those who are interested on watching it. The second step you need to take is to check your credit score, and if your credit score is not so good, you need to start building it so that you'll be able to get favorable interest rates when you apply for finance if you're not using your savings to pay for the car. And this is because your credit score plays a significant role in the car finance process. A better credit score can help you secure more favorable loan terms, such as low interest rates. It is important that you check your credit score and address any issues that might negatively impact it before you apply for car finance. Now, the third step you need to take before financing a car is to do your research. Now, you want to take time to research different finance options available to you. You want to compare the pros and the cons of various finance methods, and you want to shop around for the best deals. Consider factors such as interest rates, repayment terms, and any potential incentives or rebates offered by lenders or dealerships. The fourth step is to get pre-approved. You want to consider getting pre-approved for a loan before you start shopping for a vehicle, because this will give you a clear understanding of your borrowing capacity and the interest rate of which you may qualify. Being approved can also help you streamline the car buying process and potentially give you leverage when negotiating with dealerships, because you cannot go above a certain financial threshold when buying a car. It will also help you avoid shopping for a car of £100,000 when lenders can only borrow you £10,000. So it will just save you a whole lot of headache and help you know what you can actually afford. The fifth step is to negotiate the terms of your finance. Now, do not be shy. This is business. In business, negotiations are welcomed if done respectfully. Now, whether you're dealing with a bank or a dealer, do not hesitate to negotiate the terms of your finance agreement. Be prepared to advocate for yourself and push for the best deal possible. This could include negotiating the interest rate, loan term, or any additional fees associated with the loan. The last but not the least step to take when you want to finance a car here in the UK is to read the fine print. Now, carefully read and understand all the terms and conditions before finalizing any car finance agreement. You want to pay attention to any fees or penalty and mileage restrictions if applicable. It is essential to be carefully informed about the loan terms to avoid any surprises down the line, because once you sign those documents, you are legally bound to fulfill your obligation to the agreement. In conclusion, financing a car in the UK offers flexible options to suit different financial situations and preferences. Whether you choose to finance your car through PCP, hire purchase, personal loan, or even paying outright with your savings, it is crucial to consider each method's long-term costs and benefits to make an informed decision. With this, we've come to the end of the video. Thanks for watching and bye for now.